when we talk about the ECB and these rate cuts that a lot of people are saying seems to be potentially front-running the Federal Reserve when you talk about weakness here in Europe, is that a tailwind for European equities, or does the growth picture overshadow the equity story here?
I think, with equities, obviously, we're forecasting very mild gains in Europe, probably high single-digit gains to the year end. But we've recently upgraded our EPS forecast from 3% to 6% for this year. Yeah. And that's really trickling through some mild GDP growth, some mild GDP improvements that our economists are seeing. Where we have perhaps some lightness in the economy, obviously PMIs have not necessarily, they're bottoming, but they haven't precisely ticked up. So I think that's what we're watching in terms of going forward.
Talk to us about the EPS story, though. It's interesting that you peg that to growth as opposed to growth or consumer resilience in the United States, where it feels like that has been feeding a lot of the outperformance for certain companies in terms of revenue here. How much of the exposure to the United States is, one, a tailwind, or two, a risk if we see a slowdown there?
I think, what's key, I'm going to talk here about European equities specifically, is obviously, Europe is exposed to, is a very international style market. So let's not make the mistake of assuming it's a proxy for European economies, and right. Especially for the UK. I mean, this is really true. The UK is a hugely international market. So obviously, growth has to come from internationally. And I think you haven't mentioned China, but China is huge in this picture. So actually, less than the US, I would look at China for a source of growth. And any positive news from China, any sort of, I wouldn't say necessarily positive, but certainly easing news from China is very important for European equities, and I think that's a key driver.
It's interesting that you talk about China, and yet you're still doubling your EPS, at least for the
Correct.
year, given that China's still in an economic slowdown, one I would argue that's more severe than any other country, or at least in the ones that we watch in terms of Western economies in the entire world. So why the divergence there? If EPS is expected to double, in your view, does the Chinese consumer play more into it, or is it more of an export story?
Yeah, I wouldn't say it's exactly doubling. I mean, we're going from 3% forecast up earlier this year. The market was pricing probably 5% down. It's corrected. Yeah. We got to that point. We've had a lot of interesting information at full year results, and we're moving up to 6%. It's still, mid-single digit. It's still very subdued. In our targets, when we expect the market up mid-single digit, we do not expect, a re-rating. It's purely, the same multiple applied, which is 12, 13 times really applied to the same EPS growth. So I think where the growth is coming from, first of all, resilience in margin. I think we've seen incredible resilience in margin. We're very surprised. I guess the market was certainly surprised by that, and sources of growth quite well diversified, frankly, in Europe, and some fairly unique sectors, like luxury goods, are doing very well.